If President Donald J. Trump were to impose high tariffs on imports worldwide, the impact would be complex and could have both positive and negative effects on the US economy and global trade. Let's break it down. How high tariffs could impact the US economy, potential benefits for the US, encourages domestic production. High tariffs make foreign goods more expensive, which can push consumers and businesses to buy American-made products. This could boost US manufacturing and create jobs in certain industries. More government revenue. Higher tariffs mean more tax revenue for the US government. This money could be reinvested in infrastructure, military, or debt reduction. Reduced trade deficit. The US imports more than it exports, leading to a trade deficit. Higher tariffs could reduce imports, narrowing the trade gap. Potential negative effects on the US: higher prices for consumers. Businesses that rely on imported materials, e.g., electronics, cars, clothing, will pay more, leading to higher prices for consumers. Inflation could rise, hurting American families and reducing purchasing power. Retaliation from other countries. Nations affected by US tariffs will likely impose tariffs on American exports. US companies, e.g., Boeing, Apple, farmers, could lose access to big markets like China, Europe, and Canada. This could hurt American industries dependent on global sales. Job loss in certain sectors. Industries that rely on global trade, tech, agriculture, auto industry could suffer as foreign demand drops. Farmers, in particular, could be hit hard if other countries place tariffs on US crops. Economic slowdown, market volatility. Tariff wars can cause economic uncertainty, leading to stock market instability. If global demand for US goods drops, it could slow down economic growth. Impact on other countries. China relies on exports to the US. So high tariffs would hurt its economy and manufacturing sector. However, China could retaliate with its own tariffs on American goods. It may also turn to other trade partners, e.g., Europe, Africa, Latin America, to offset losses. European Union, EU. Europe exports luxury goods, cars, and technology to the US. High tariffs could hurt companies like BMW, Airbus, and luxury brands. The EU might respond with tariffs on US tech and agriculture. Canada, Mexico, the US, has deep trade ties with its North American neighbors, USMCA agreement. High tariffs could disrupt supply chains, making goods more expensive for everyone. Developing nations. Countries that export cheap goods, clothing, electronics, raw materials to the US would suffer economically. Some may shift trade focus to China or India instead of the US. Would high tariffs make America rich again? Short term, it could bring some economic boosts by protecting US industries and increasing tariff revenue. Long term, it risks higher inflation, job losses in key sectors, and a global trade war, which could ultimately harm the US economy. Conclusion: while tariffs can be useful in certain cases, an all-out high tariff strategy could backfire by raising prices, slowing economic growth, and triggering retaliation from other countries. A balanced trade policy rather than extreme tariffs might be a better approach for sustainable economic growth. Thanks for watching. If you enjoyed this video, please subscribe to Always Mabel Canada and click the notification bell to get notified every time we upload all the amazing videos. See you next time.